All right, we are live for the Sunday market breakdown this week, the first week back in the Dubai edition. Finally back in Dubai after being all summer in Europe, in and around Europe. So it feels good to be back, but yeah, just getting back into the swing of things. So anyway, if you're joining me for the first time here on the Sunday market breakdown, my name is James. I'm predominantly a Forex trader. I've been trading for the last 5 years, 3 and a bit more profitably. The other, not so much. I struggled a lot in the beginning, and yeah, that's why I kind of started this channel more recently and a community that I run called Leveled FX. The way I trade is incredibly simplistic. I basically buy and sell off of levels, which I'll get into in this call today, in the live stream. I'll run through some examples of how I approach the market, but the main purpose of the live stream here today is actually, I'm going to share this. There we go. Yeah, so this is what we're looking at. Basically, each week I go through the trades that I've taken, why I took them, and then I have a look at the week ahead as to what kind of things we can expect. So this week, there's been 7 trades, 1 failed trade, some really interesting stuff happening in the market this week, some very unexpected stuff. So when I talk about market conditions, I think this is something that is not taught in any kind of Forex trading courses. I think it's the very first thing that should be taught, really, once you've grasped the basics of any trading strategy that you're learning to trade. But if you're unaware of market conditions, this is, I think, the number one reason why most traders fail, is they apply a strategy to certain current market conditions, and it may work for a little bit, and then something will change in the market. The conditions will change, and the same strategy that you were having success with all of a sudden stops working. Now, typically, people don't look past that. They don't look any further than the strategy not working this week, and therefore you get people hopping to the next strategy and trying out the next best thing, and thus completes the cycle of strategy hop, fail, valley of despair, repeat the process, and you just go round and round and round. And depending on how poor or good your risk management is, you either end up losing a ton of money, or you're able to somehow keep yourself in the game, which is better than what most people do. Most people will lose money. It will hurt quite a lot, and then they'll go away, sometimes for a few years, sometimes it's a few months, and then they come back and then they try again, and then the process restarts. Market conditions are incredibly important. So I'm going to get into a little bit about that this week, and how the markets were affected by it, how I was caught out by it as well. But I expect that to happen. You know, we've had a very subdued summer months, because typically in the summer, the market does tend to be less volatile. October is the start of Q4. There's a lot of positioning happening. You know, the banks, the institutions, they use quarterly reports, and excuse me, they gauge a lot of what they do based on the quarterly analysis, as opposed to, you know, weekly. And so October marks the beginning of Q4. But anyway, just quickly, what I'm going back to me and what I'm doing here is I'm sharing how I trade. And like I said at the beginning of this video, it's incredibly simplistic. And I think trading needs to be that way, because when you're a beginner, or even somebody that's not a beginner but not yet profitable, to me it's the same thing. Like, you're beginning your journey to profitability. If you're trying to trade some complex strategy, there's going to be too many things, too many variables for you to track to be able to develop yourself as a trader. So what I do, what I preach about the most, is what's helped me the most. So as I mentioned before, I struggled to get profitable as a trader. And it wasn't until I started the process of journaling. Now, hold me out. Journaling's becoming this trendy new thing that everybody's just started talking about. But journaling for me was more about just taking the trades that I was going to take that I thought met my trading plan, writing down what actually happened, and then spotting things that could improve my edge by keeping me out of trades that usually go against me, and allowing me to spot trades that usually go in my favor. And it sounds incredibly simplistic. That's because it is. That is literally all you need to do to develop yourself as a trader. You need a system and a process to follow that will allow you to do that. And that's exactly what I have been doing with the guys over in Leveled FX. Now, Leveled FX, don't worry, for those of you that think I'm about to sell you a course, there is absolutely nothing for sale. Everything that I do in here is for free. You can learn my approach to the markets. There's people have told me that I should charge thousands of dollars for this, but if I did, it would kind of defy the point of actually putting it out there in the first place. I think everybody can learn to trade. There's so much information out there that holds people back, confuses people, I'm trying to set that right in Leveled FX. I do have a premium group as well that people do pay for, but I think I do that in the most ethical way, whereby it's pretty much the same thing as what I do in free. You just get access to me. And so if I'm going to give you my time when I could just be living my life and doing my thing, then I think you should pay for that. And also I need to justify the time that I spend with people in there. It's great doing good things with people and having good people around. I do love that, and helping people is great, until you have a bad day and you're like, why do I do this? So, I'm just keeping it very real and being very realistic about why I do this, why I do what I do. I love to help people get results. So if you like what you see in this video today, you can go ahead and check out school.com/leveledfx. It's LEVELLEDFX. I'll put the link in the description. In fact, it is already in the description on this live stream, I believe. So you can go ahead and check that out. It's completely free. Within there, there's the community aspect. So questions get answered by guys in here. There's a start here course. So if you've never traded before and you have no idea where to even start, I got you covered in here. You can go in, start with the welcome. Once you've completed that, you can go into learning how exactly it is that I trade the markets. I do these live streams every single week. If you're just finding me here now, and you want to see how long I've been doing these, I think this is maybe number 15 or 16, I forget now. But this is all relatively new. I'm not a YouTuber, I'm not a course creator, I am a trader, just sharing my knowledge on the interwebs. Good news this week is that there aren't that many trades to get through. And you'll have to bear with me, I've got a bit of a tickly cough going down. Something I picked up in the airport maybe. While I was coming back to Dubai. But I've been having quite a lot of weeks where there's been more trades than not, and that is, again, due to market conditions, which I'll get into. I hear the comments pinging away, so I'm just going to go and see who's here, make sure you guys can hear me, because I haven't actually checked in. We got Dima, Michal, Lubomir, Yuji, Mike, Burrito99. I don't think I've seen you on the call before. That's good to see you. Janad, what's up? Fresh start, Russ. Nice to meet you, man. Thanks for coming. Thanks for checking it out. Suf, good to see you, man. You made it to the call. Excellent. So we've got a good crowd here. Some of the regulars, some new. You guys know how it goes down. So let's get into it. The first trade that I'm going to cover off, you have to bear with me as well though, on my new setup here. Usually I've got another monitor which helps me out, but we'll keep it real, we'll keep it raw. 7 trades this week. Euro CAD short and gold long on Monday. Euro New Zealand, Euro Aussie trades, and Euro CAD on the Tuesday. Tuesday was the hectic day. If any of you were watching the news, you'll know that there was an attack on Israel causing some problems in the Middle East, and the market sentiment changed off the back of this, which is what I call unforeseen market conditions off the back of a strong dollar. So we had a strong dollar throughout the day, and then I think around, I forget the timings because I was actually traveling on the Tuesday, which I'm also going to partly blame my lost trade on. But at the same time, it could have been avoided after reviewing my trades yesterday. So Tuesday was a really interesting day, and then Thursday and Friday were my first days back in the Middle East. So I wasn't on screen much, but I did manage to catch a euro pound short on the Thursday, which went against me to start with. So I'm going to get into how I managed that. And then pound Swiss on the Friday was a nice finish. It was kind of a bit of a hectic week between Tuesday and Friday, or Tuesday, Wednesday, Thursday. Wednesday I just didn't trade because I was still traveling. It was a long journey. But the Monday was a good day, and Friday was also pretty good. So EuroCAD, I'm going to get straight into that. And if you guys have any questions along the way, pop it in the chat. If you're watching the replay of this, drop it in the comments. I answer all the I'll say this. I answer all the respectful, intelligent comments, but I definitely don't answer all the comments. He's just going to sell you a course. Yeah, wait for it. It's free. Making millions off of the back of that. Anyway, that's people, isn't it? So what am I doing here? TradingView. Yes, EuroCAD. I had this set up on replay mode because I wanted to use this. I'm never usually this prepared for showing people how I actually trade. So getting into how I trade, I'll try and explain this in about a minute or less because it is that simple. There are some intricacies to it and other ways that you can improve the edge that you have with how I trade. However, the basics are just that, incredibly basic. What I'm looking for is identifying levels on the chart. So I've got this level identified just here. Why is this a level? Well, because price reacted from this area here. I refine my levels to the 4-hour candle body close in most cases. I don't want to change the time frame right now because I'll lose my position in the replay mode, but I'll show you as well that my favorite levels to trade are from the higher time frames down. So weekly I love, daily I love, and I'll often refine weekly and daily levels to the 4-hour candle body close. So that is not the wick, it's where the candle body closes, which is kind of, it's self-explanatory, but I do realize that there are some new people watching this, people who haven't traded before. So where the candlestick actually makes its close, that is where a level forms, like here, over here, you can see that would be a level. I only use the most recent price action though, unless we clear these highs and then the most recent price action becomes this level over here. Why does that become the most recent? Because price has not come back to it since it made its move away. So I've refined it to the candle body close. So when price actually gets up here, I would expect to see some reaction. However, the most important part is how price gets there. I do not want to see a slow fading move towards the level. I want to see a fast, impulsive move into the level, ideally. If I see that, excuse me, this is going to be a common theme throughout the live stream. I've been saving my voice all day so I can get through it. This is the level that was identified just here. And so what are we going to do? I'm going to look for a move in that looks something like this. Boom, move comes in. And then what happens here, because this is an obvious level, most likely whoever has been in this move on the way up to this level now needs to take their profits from this. And they will quite often price never just goes in a straight line. There's always some pullbacks. And the pullbacks usually occur either because it's a reversal point in which case nobody knows when price is going to reverse. Anybody that tells you they know when price is going to reverse is talking out of their bottom, because it's not possible. Like if you could predict that, you would be a trillionaire. So I don't try to predict what's going to happen in the markets. I wait for things to happen that create a situation where the outcome is very probable. So it's high probability stuff. And so if there's a strong move towards a level, profits have to be taken. And when profits are taken, the only way you can do that is by taking positions in the other way. So if you're in a buy, you need to look for sellers to get out of your position. So when the sellers come in, the market moves back the other way. Not a huge way, but let's say it moves back enough for you to have a decent take profit from that. So that's all I do. And so the move in here is essentially from down here. It's when price last came up, we had a small pullback here to there, and then we're looking for price to move in. So this Euro CAD trade on the Monday was, what the hell is going on here? Sorry guys, so we're getting used to the setup. So if I play price forward, you will see what happened. The level, so this is literally Monday morning, right? This Monday morning, 5 a.m., 4-hour candlestick going on, right? So the market's open. Oh, the other thing that I will look at as well is I want to see that price is overextended. So what do I mean by overextended? Well, price will only typically move a certain amount of pips each day. It's different for every currency pair depending on how volatile a currency pair is. But there's this thing called average true range. It's the only indicator that I use on my chart, and I don't use it as something, well, let's just screw it. I do use it as an indicator, right? It indicates to me whether price has moved far enough into a level. However, I will also manage it by measuring. So I know on EuroCAD, like an 80 to 100 pip move in to the level is quite good because I'm working on percentages and how much price is going to pull back from that. So I'm typically looking for trades that are going to give at least 20 or 30 pips at the first profit target that I have. And I'll get into how I identify those in just a second. And so if I put average true range on the chart here, you'll see on this Monday that it actually came in around here. So you've got the low and you've got the high. So price is typically only going to move up to here. So if price moves past it, now the likelihood of us seeing a reversal, not a reversal, but a pullback, maybe a reversal, but we don't know, is quite high. So I look for the strong move in, for price to be overextended, and for price to have moved in enough to give a decent pullback. So anyway, I'll just play this out. There's the strong move in, right? And this is easily identifiable. It's literally just like you to have a conversation with yourself in the morning and you say, look, if price gets here today, I'm going to take a short. And you just place your pending order. You set an alert just before. So you come here. Actually, it's not going to let me do it because I'm in replay mode, but I'll show you in a sec. You set your alert. So you get an alert just before price gets to your pending order. That gives you enough time to check, make sure that everything's good in the market, like nothing's changed. And these are the intricacies that I talked about that are sort of outside of just the simplicity of a strong move into a level and a pullback. But that's all you need to know in order to be profitable with this. Sometimes knowing more, like what I know and how I include everything in my trading, can actually be a hindrance. Sometimes ignorance is bliss. So anyway, strong move in, and you'll see that after that, boom, what do we get? We get the strong move away. Now, where am I going to put my first area of potential struggle? This is how I identify my profit target. So what I'm thinking is, like, where is price? If price comes back the other way, where is it most likely to start struggling again? And by that, it's kind of like, when is it going to start to slow down? So for me, because we've had such a straight move into this level, for me, it's going to be above these highs here, because as price comes back into here, it's like I see this as traffic, right? So it's kind of like a busy highway, there's congestion, and so as you're kind of speeding along into it, you're going to get stuck. And as you get stuck, there's going to be a bit of a hold up, and either price will break through this and it will continue down, or price will continue excuse me, back in the same direction that it was already in. And I don't care which way it goes. I would like for it to continue going in my direction. And there are ways to increase the probability of being right about which direction price is going to continue in. But if you know, the basics are, if you're in an uptrend, you could leave a partial position on this trade and run it up. But if it's just a quick in and out, like you are trading against the trend, then just cash the full profits, right? So there are ways where you can identify like when it's going to be good to hold and when it's going to be good just to cash 100% of your profits. On the prop firm challenges that I have, not the challenges, sorry, the funded accounts, I like to cash full positions. On my personal account, I like to try and build running positions from the lows of a range and from the highs as well in short positions. So anyway, going back to it, first area of potential struggle is going to be identified by coming into this, let's say, traffic zone that we've got here. So that's where I'll go ahead and place my first profit target, thus giving me around 44 pips or so from my entry. And so price absolutely smashed through it, but did see a pullback within this congestion area. And, that's what I typically expect. Price does quite a lot of the time just come down, pin off the wicks here, and then continue back in the same direction. And so I like to ensure that I get myself paid nice and early. I mean, your risk reward is terrible. I don't care because my hit rate's so high. Like, you see back through all the live streams I've done over the last 15 weeks, there haven't been that many losing trades. And that's not a brag. People can brag about their risk reward. Some people have a 1 to 5 risk reward on their trades. They might have more losing trades, but when they get that winner, it's like let's say they've risked 10 grand and they've made 50. That's a good flex. I like that. I don't have many trades like that, but I do have a very high hit rate, meaning that most of my trades work, all of them, pretty much. Never say never. You can't go into trading thinking you're not going to take a loss. That would be ridiculous, and it'd be the wrong mindset to have going into things. But I just know that that's one of my strengths. I know that one of my weaknesses is my risk reward. So when I do take a loss, it does hit me harder than it would most. But it's just a rare thing. So anyway, that was the Euro CAD trade. Hopefully that makes sense. If you've got any comments or you want to ask any questions about that, feel free to pop it in the chat. But we've got quite a few regulars here, so I know you guys are up to speed on this. Just have to bear with me because I know that a lot of people watch this stuff back. I do the same video every single week. The trades are different, but it's the same setups. And so people seem to enjoy that, so I keep doing it until you guys want something different. But to be honest, like, trading is that way. It's not something that excites me anymore, and I think it's been that way for a number of years. And I think that is the right way for it to be, meaning that if you're getting excited about taking trades, you probably need to chill out a little bit and find the pleasure in trading in the things that are more important, like reviewing your trades, journaling what you're doing, even planning your trades. Like, you need to find the enjoyment in that. And yeah, once you get to that stage in trading, everything just becomes easy. But don't get me wrong, like, learning to trade is probably not for most people. Like, I say that honestly, like, there's not a guy that's trying to sell you some courses on how to do trading. Like, there are easier ways to make money, but what I will say is trading is the hardest way to make easy money, because once you know, it is easy money. But you've got to have a very rigorous discipline about how you approach the markets, how you structure your time in the mornings and evenings especially. Throughout the day, I don't believe you need to be so strict. Like, I go about my day and do other things. I'm not on the charts all the time. I'm certainly not watching them all the time. But yeah, it does require a discipline that I just think most people don't have. It's not that you can't train it. It's just that people would rather go do something else. Like, there's all these things you can do online, right? Like, maybe you do affiliate marketing, or maybe you do drop shipping, or maybe you, like, I don't know, like, whatever it is, like, there are easier ways. I wouldn't say easier ways. I just say, like, more normal ways that fit with, like, how real life works. Because trading is not like real life. In real life, the harder you work, the more you make. And in trading, that is true to a degree, but it's not what you think. Like, the more trades you take is not how much more money you'll make. Actually, the opposite is true. The less trades you take, the more money you make. The more planning you do, the better trader you become. The more journaling you do, the more time you spend reviewing your trades, will make you a better trader and will make you more money in the long run. It's just, that's not the fun bit, right? Like, that's not what people want to do. They want to press buy, they want to press sell, they want to be in the trade, they want to see the numbers going up or down, depending on whether you're buying or selling. But, like, that's the reality of trading. So anyway, I think I've covered off how I trade in that. It was longer than a minute. I take that on the chin, but I think I explained, it's basically a strong move into a level and then a pullback. We're riding the profit taking on a given trade. So that's how it works. Now, what do I want to do now? Notion. Right. So gold, also Monday. Gold is doing what it did back in, I think, was it the end of August? We'll check. Gold, when it's consolidating, is beautiful for just bouncing off levels. Now, where is my gold here? Is it gone? FX, this is why. I'm on the wrong bloody chart. Let me just check something here. Pairs ICM. Gold. Come on, be kind to me. Right, here we go. So, where were we? Yeah, back along here. So this was... Okay, it was the end of August into early September. So what do we have with gold? Let's get off the 1 hour chart. I don't like being that low. So for quite a long time with gold, we just consolidated here, right? Around this $2,500 level. And then we broke out of it. Everybody lost their shirts. And I told everyone, gold will break eventually. You can keep taking the levels. But just know that at some point, any day now, I think it was the day before I mentioned this, like gold is going to break. And when it did, yeah, people got absolutely stuffed by it. But like that's what happens with gold. But how you can stay on the right side of it is like this. So this is early on in a consolidation. So we've now moved up. We're sort of hovering around that $2,650 level with gold. We've got the high up here. We've got the low down here. Levels work exactly the same way. So what's going on here with this one? Well, as you can see to the left here, we've got a 4 hour level. So price moved up away from this and gold really moves. So like that is quite a decent move on gold. And then what we had is the strong move in. Like it doesn't look that strong on gold, but trust me, this is a lot of pips for gold. And the 4 hour level held perfectly, as you can see here. What else did we have? We also had average true range, if you need me to zoom in so you can see that on your screen. That's this line here. That is the average movement that gold will make in a day. So that's the low. So we just about crossed that, and then we made our pullback. So bear with me a sec, guys. Oh, okay. We carry on. So yeah, there's a really nice move off of that. Fairly quick trade. If I drop down to the hourly, I once again identified my profit area by the first area where I thought price would start to struggle. With gold, I treat it a little bit differently because it is quite fast moving. But we came into this zone here. We tagged it around 10 o'clock at night, I believe, is when we actually hit it. Or was it just before? Yeah, it was around 10. And then we actually came up into the level that I had marked up, which was this candle body close here, along with these wicks over to the side here. So it ended up being a really nice trade, and that was it. So once again, just a strong move in to a level. It was the 4 hour refinement on gold, and yeah, decent move. And again, you can when in the consolidation, you can really hold these for a lot longer. But I originally did have my profit target a little bit further away because I knew that we're in the consolidation. We're going to be going up and down. And I can often get, like 2 or 3 times more what I typically take off profit here. But given the fact that we came in later in the day, I decided to move my profit target in a bit closer so that it could potentially get hit overnight. And also we were going into Tuesday, which was a bit more volatile. So anyway, that was the gold trade. Pretty nice. Now let's get into some of the fun stuff. So Euro New Zealand, I actually documented this. So as I mentioned, I've got the premium group. This is where guys are paying me on the monthly basis. We get on a daily call every day. I run through my charts. I answer any questions. And the main thing of this group is to keep people on track and get them funded with prop firms. I want people to be able to scale their capital. I've got over $1 million in funding this way. I think it's the best opportunity of ever in trading. Before, when prop firms did not exist, you needed to trade your own capital. You needed to take higher risks to scale your capital. Now you don't need to. Now you just need to become a good trader, and the capital can be acquired by you. So I'm helping traders get their first $100,000 in capital because that can make a significant difference to their lives. If you trade the way that I do, I don't want to tell you there's a certain percentage that I make every month. It's different across my different accounts and how I manage risk. But let's just say with 6 figures in funding, you can replace most jobs in Western culture to live a fairly ordinary life, right? And as you scale the capital, life can get very interesting very quickly in terms of what you're able to pull out of these prop firms. The other thing is you want to obviously reinvest the money that you do make from them. We don't know how long prop firms are going to be around. The model is a little bit broken at the moment, as in the trades don't go through to a live market. In fact, I don't want to confuse you guys about this, but basically it's not real capital that you trade. To take a prop firm challenge, for those of you who are new and don't understand how they work, you pay a fee for $100,000. The average, let's say in the industry, is about $500 for you to take their challenge. If you pass it, meeting their criteria, you will get $100,000 in pretend capital. And the reason I say pretend is because the money does not exist. You continue to trade a demo account. However, the profits that you make on that account, 80% of them in most cases, sometimes 90, gets paid to you as a profit share as the trader. Where does the money come from? It comes from all the guys who failed their challenges. So it's kind of like the insurance companies. The model is a little bit backwards. It's in their best interest not to pay you out like the insurance companies. And so do prop firms really want good traders on the platform? Not really, at least not at the moment. I'm hoping that they fix the model and actually get more regulated so that they can actually send orders through to a live market. So that with good traders on the platform, they can still make money from them too, by copy trading them or doing something like that. But anyway, yeah, I digress. So this Euro New Zealand trade, where did I put this? I'm pretty sure I put it in here. I should just search for it really. NFP day. Here it is, Euro New Zealand, New Zealand dollar as the driver. So I was sharing this one live as I was doing it. I managed to take 40 odd pips off of this one. Well, my internet slowed down for some reason. Trade was about an hour and 26 minutes. And let me show you how it worked, because it wasn't your typical trade. Let's get into it. Euro New Zealand. Have I done this on another chart? No, it's down here. Okay, so this was it here. As you can see, we were not on average true range when I took this entry. So if I rewind price, rewind price, and it was, pretty sure it's here I took it. So we'd already come up to the level from the 4 hour. Let's go back to the 4 hour. There it is. 4 hour candle body close. And we'd already had a reaction, or is this the same one? I think it's the same one, sorry. There it is. So that's the move in. Now, why did I think that price was going to work again from this same level? Well, the reason I thought price was going to work again from that same level is if we have a look at this was Tuesday at 11 a.m., I believe. Or was it earlier? I think it was the 11 a.m. candle. I've now got my time on Dubai, so this was, 10 where I was. And I think I posted that to the group around 12. That just says 5 days ago now. Anyway, New Zealand dollar was the driver, and I'll explain why. So we want to go back to Tuesday at, this is actually in the same thing. Yeah, so perfect. So this is synced. So as you can see here, there's a level on New Zealand dollar. And what I was expecting to happen is New Zealand dollar, nice strong move in, right? So I could have also taken the trade from here and then rode the pullback to this wick, right? That would be my first area of potential struggle. So my trade would look something like this if I decided to take it on New Zealand dollar. So that would be my entry, and then my profit target would be like something here just before this wick. So we could say that's APS1. And then, that would be a decent trade. In fact, I think Yuji actually took, who's on the call or on the live stream. Yeah, he was looking at exactly the same thing on New Zealand dollar, and then he actually ended up taking it for a $390 profit there, which is nice. So he took the same trade, right? It's the same trade. The only difference was he took it on the on the driver of price, whereas I took it on a Forex minor pair, which is slightly more volatile and has more movement to it. So that's why I ended up taking it on Euro New Zealand rather than just trading the driver itself. So as price came down here, boom, we got the reaction, and as you can see, straight to first area of potential struggle. And the same thing happened with Euro New Zealand. I think this is already played out now. Yeah, so basically because I played it out on New Zealand dollar, you can see we moved in here and boom, straight to the first area of potential struggle. In fact, I think this move went, just went to here. So I could have captured a little bit more on that, but still, it was that about 40 pips like I showed you in the community. But that was the Euro New Zealand trade. It was kind of more contextual. It wasn't just a simple, I'm just going to take this level because it's a level. I was also eyeing up the fact that New Zealand dollar was about to hit its level. And that was a great confluence for just giving me more confidence in that Euro New Zealand dollar trade. Hopefully that makes sense to everybody. Right. Let me just have a quick look at comments, see if we've got anything coming in. Easy. All right, sweet. So there is always a slight delay on the comments as well. So if you guys do ask me, it's sometimes takes a little bit of time for me to actually respond to it. Either I don't see it, but most cases I haven't had a chance to. Well, it's just not in real time. There's a bit of a delay. But anyway, we carry on. So Euro, sorry guys, my throat's killing me. Euro Aussie long on the Tuesday as well. So we had a great start to Tuesday, and then in the afternoon I was traveling. So Euro Aussie, this was a level. Let's grab this. It's always a level, folks. That is what we do here at Leveled Effects. We take the levels. So yeah, nicely. I'm in the replay mode, so it's nice. Everything's just kind of like I'm like taking my Tuesday. I'm taking you guys through the day. So price was trending down. That's not something I look at. Don't worry about that. It's just I'm trying to figure out where we're going to get a reaction on price. So for me, we have this weekly level here. If I go up to the weekly chart, I put these weekly levels in gold because they are the daddy-os. Where is it? Basically, it's this candle body close here, and then you can see that we gapped like 53 pips down. So the candle body closed here and then reopened down there. When that happens, I always refine it to where price actually closed, not where it opened the next day. So that's the level for me. And then, as I said, I often like to take a weekly level and refine it to the 4-hour to reduce any potential drawdown. So what I've done is I've literally just taken these candle body closes just below. You see that right there, and refined it to my entry. So that was the entry that I took. Weekly level, so pretty strong. The move in wasn't exactly what I wanted to see because we had a lot of uppity downy. It wasn't a very strong move in, but again, weekly level, so I'm not going to mess with it too much. And then, yeah, we got a decent move away from that before going a bit lower. And then I'm pretty sure price did react later on in the day as well. Yeah, there you go. So weekly level holding quite nicely. So we did pull away, getting the first area of potential struggle done. So first profit target, and then we kind of messed about around the weekly level and then pushed up finally a bit later in the day. So that was the Euro Aussie trade. It was a weekly level. Not the strongest move in on the day, but I was kind of more factoring in the fact that we had this move in. Yeah, so the move in, if I measure that, was actually fairly significant. It was like 600 pips moving down towards that. So it was time for price to react, and obviously we had this big move off of this level before, so it was a strong level, and that was the reason for taking the trade. Easy stuff, right? Euro CAD long. This is where I got absolutely smashed on the Tuesday in the afternoon. So let me show you how that one went down. There it is. So we had a very strong dollar. Where is this? Euro CAD. This is not the one that I wanted to show you. Not the level. Just bear with me a sec, guys. Euro CAD. Or is it pound CAD? Is it pound CAD? It was pound CAD. My apologies. So, did I put pound CAD here or Euro CAD? I wrote Euro CAD, but it's pound CAD. Forgive me. So anyway, this was the move that we had. We had a very strong dollar, which put the pound on the back foot. The pound was just tanking, as was euro, hence my confusion with like which one we were looking at here. So euro CAD was dropping more so than pound. If we look at the euro dollar, or is it here? Just absolutely tanking from the Tuesday, and pound dollar, same kind of thing. And then we've reacted off a weekly level to close out the week. But yeah, this pound CAD move, not much I could have really done about this. So uppity here, fit the rules perfectly. What have we got to the left? We've got a 4-hour candle body close. We've got average true range about here. So average true range was breached, and I had a pending order placed right here. It was lovely. And this was around 6 p.m. when I was at the airport. So not the best timing. Yeah, by the time I could actually check what was going on there, what I should have done in hindsight is cancelled my pending order on that one. I haven't traveled for quite some time. It's been a few months. But yeah, that was what happened there. And like, not the levels don't always work. If I'd seen this big move on pound dollar, that we were just kind of like on this freight train and we'd smashed this level on pound dollar, I would be far less inclined to take that trade on pound CAD. But, you know, it is what it is. I'm only human, and every now and then we get to take a loss. You guys commenting, coming in. Rebel, nice to see you. Yeah, so that was the pound CAD smashed trade. I think some other guys got whipped about by that as well. It is what it is. Good start to the week. And then, yeah, just this one in the evening on Tuesday completely wrecked me. But, yeah, risk was managed, and taking a trade that ends up in a loss is all part of trading. You just have to move on from it. But like I said at the beginning of the call, it's quite rare for me to take a loss. And again, that is not a flex, because there are certain other things that, like my strategy requires, my strategy, I don't like calling it that. It's just how the market moves. So I call it more of an approach. But the approach requires me to have a high hit rate. So when I do take a loss, it is a bit annoying, especially like that when it could have been avoided had I not been away from the screen, and had I actually seen what was going on in the market. But anyway, it is what it is. That even had pound alignment, but pound dollar alignment, as did this euro pound trade that went against me. So coming off the back of a loss on Tuesday, I didn't have any trades on Wednesday. I helped the guys in the community, and then I pretty much just ended up going to bed. Like, I went to bed just after our New York session call, so it was probably around 6 p.m. here, and I literally slept for like 12 hours straight. It was beautiful. But yeah, then the next day I was ready for trading. So Thursday we opened up with euro pound. It was a early morning trade, I believe. It was early in the morning. Excuse me. So yeah, this is what happened. Once again, being caught out by average true range and levels getting smashed. And I know that there were other people also in a similar trade to this. Let me go back up to the 4 hour so it's a bit clearer why I got involved. Yeah, we had this big move down on the euro from Tuesday. Euro pound typically barely moves. It goes up, it goes down, but not by very much. Like, that's a big move for euro pound, and it's 40 pips, right? So where did I find myself on Thursday? Well, I found myself on Thursday around 35 pips down in drawdown on euro pound. This was the first trade that I've taken on euro pound in a very long time. We kind of have a bit of a funny thing going on in the group where I say that I don't even chart it up because I'm not interested. And then we had one member that actually had a trade on euro pound. And so, you know, it's a bit tongue in cheek, but we're seeing who can take the best trades on euro pound. This was not a smart move on my part, because I know that I don't like trading euro pound. But anyway, the rules were met. Everything was there. 4 hour candle body close. Average true range was all the way down here, of course, because euro pound barely moves in a day. So I thought, okay, we'll come up here. Some people might have thought, oh, I'll take this level here. But because we'd already used it from over here, I thought, no, if we breach this and come up there, I'll look to get involved here, which I did. and then price just continued to move against me. So how did I manage this? Well, fortunately, euro pound doesn't really move that much. So I allowed price to come all the way up here, and I said, my God, if price gets all the way up here, I'm taking another position and I'm covering my stop above here. So that's what I did. I didn't double up at this position. That's usually what I would do. But given the fact that we were already so far past average true range and there was a level above, I wanted to be able to go again if we went up here. And let me explain my thinking behind this. Like, I don't want to encourage people to just keep trying to fade the move, because I don't think that's a good idea. But let's say price gets all the way up here, right? And I've entered my first position here. I've entered the same position again here. And then price is now, I find now that price is all the way up here. Like, I can have a pretty tight stop loss here and just give that level another go, without adding anything extra really to my loss. Like, if my stop loss for these guys is up here, and I double up the position once again here, like, that's going to be almost nothing, like, to risk 7 or 8 pips. Let's call it 10, right? I don't usually go below 10. So that would have been worth a go. Fortunately, we didn't get there, so all was good. And then basically what I did here is I took price all the way back down to the first area of potential struggle. I didn't take it to break even. The reason why I didn't take it to break even on the first trade is because we had these wicks above here. So I put my first area of potential struggle just above that as my first profit target from this level here. So overall, what happened was I took profits from here to here, and I took a loss from here to here. So you can see I made more profit than I made loss. And then price did actually come back to break even, but that wasn't my plan. My plan was just to mitigate risk and to come out smelling of roses, which I managed to do. So as you can see, price did work out there, but that's just how I managed it. So in the course in Leveled FX, don't worry, it's not paid, it's free. You can go and learn it for free. It's leveledfx.com, or you can go to school.com, my voice, school.com/leveledfx, and you can join up for free there. You can come and learn exactly how it is that we're trading. There are more nuances, and if you want extra help, joining the paid community is going to get you there faster. It's the smartest thing to do. If you've actually got time to allocate to trading, you want to actually make this something that you do in your life. If you're just here to kick the tires, then by all means, go and check out the free course. But it's like everything in life. If you don't apply yourself to this stuff, you'll never make it work anyway. All right. That was euro pound. So yeah, in the course, I do talk about using a backup level when required. So that was a perfect execution of using the backup level, and maybe even a third one. Kind of disappointed I didn't double up here, but like I said, there was a level just above that price could tap into. We went halfway there. So all in all, I think I managed that one pretty well. I'm quite happy with the way I dealt with that. And then lastly, we have pound Swiss on Friday. That was the only trade I took. Let's have a look at that. You know, it's just going to be the same stuff over and over again. There it is. Beautiful. What have we got? 4-hour candle body close. Average true range breached, pinned the level, no drawdown, and then straight to the first area of potential struggle for 41 pips. Basically, just back to average true range, and then price continued on up slightly after that. But it was a textbook leveled FX trade. Nothing really to say about that one, really. I think we also had pound alignment. Pound-dollar alignment. So as you can see here, yeah, we actually had a lot of alignment on this one. What am I talking about? So 4-hour candle body close, average true range breached, and yeah, then pound made its pullback. So why is that relevant? Because obviously we're trading pound Swiss. So when pound made its pullback, that's when the pound strength started to kick in. So I'm using levels across multiple pairs as a way to add additional confidences to build my confidence in taking that trade. So seeing pound dollar hit its level, I think pound CAD also hit a level, or it just missed it. So that was the level here on pound CAD, just missed it, but also it was just lagging behind. And so once pound dollar hit its level, it was go time. So it just took off. Additionally, the other Swiss pairs were also at levels, I believe. I think this would have been around the same time. So not a significant level to trade, but Euro Swiss had moved away. It had come back, hit this level, and then bounced off. Aussie Swiss also, I think, was around about a level, doing the same thing as Euro Swiss, a move up, a move back down, and then a move away. Again, not one I trade because it's not near average true range, and there was no significant move away. New Zealand Swiss, let's have a look at that one. Yeah, New Zealand Swiss was the better one because we just tapped into a level there, 4-hour level, boom. But as you can see, like, would you rather take New Zealand Swiss, or when you look around, like, does pound Swiss look the better setup after a strong move like that? So out of all of them, pound Swiss was the winner. That's the one I took, and it was a beautiful trade. So that was it. That was the week. Not as many trades as I have been taking on average, but I did say that I'd talk about market conditions. So being the first week of the month, we also had a non-farm payroll. So it's a biggie, probably one of the most volatile news events that happens in the markets, not only for Forex and currencies, but indices and everything. Oh, the other thing I wanted to show you as well, for all the crypto bros out there, if I check out Bitcoin, just to show you that same Tuesday, where are we? Tuesday, there it is, Tuesday. So as this, the move that we saw on Tuesday was a strong dollar. And the reason the dollar strengthened on Tuesday was because the market sentiment changed. We went risk off, meaning that investors, let's call them investors, could be Santa Claus, could be them, like whoever you think moves the markets, and whoever. Don't know if you can hear that. It sounds like the alarm in the building going off slightly. Maybe someone cooking dinner. Anyway, what moves markets tends to be the dollar anyway, but sentiment at this point was that money was moving out of assets and into safe havens. And at this point in time, investors and whoever's moving markets clearly sees the dollar and like having money in cash as a safe haven, which is why we saw the dollar pump. If I actually look at the dollar index, you'll see what I mean. So same time, in fact, if I bring price back to here, we'd already had a pretty strong dollar. But yeah, around this Tuesday, that was the next move up. Monday on the 4-hour, that's why. But yeah, we had this big move up here, and at the same time, we saw Bitcoin selling off during that period, which isn't a big deal. But if anybody thinks that that the world or investors or the smart money, let's call it, sees Bitcoin as something that's safe, that is absolutely not true. And it's just clear on the charts. So whoever wants to tell you that Bitcoin is safe or is the best thing in the world, is to grab some Bitcoin, like that's cool and everything. But right now, the current market sentiment is that Bitcoin is something you dump when you're worried about market conditions. And of course, this was the attack on Israel, which it recovered from quite quickly. And I think that's because things didn't escalate. Obviously, it was a horrible event to happen. But looking at this purely from a logical standpoint and what the market did, I think any missiles or rockets that were fired were targeting military bases and not civilians or anything like that. Like, had a rocket accidentally landed in someone's back garden or come through a window of a civilian, then obviously the markets would have just shat themselves. But that didn't happen, and so we actually recovered from that quite quickly on the Wednesday, the next day. So yeah, I just thought that was interesting. Like, you can see by looking at the charts and comparing it to events that happen, what the market actually thinks of certain instruments. So Bitcoin is not seen as a safe haven at the moment. If we look at gold at the same time, I'm pretty sure gold was just consolidating actually. Monday, Tuesday. Yeah, so gold pumped up slightly on the Tuesday, but that's expected. Gold is always seen as a safe haven as well. So, and we saw stocks dropping at that time, just here. So stocks dropped, dollar pumped, and so did gold. So that was the reasoning behind it. That's not easy to spot as a new trader. But going back to the market conditions thing again, you've got the three types. One is subdued. That's when we've got nothing on the calendar. So let's have a quick look at that now. I'll show you what I mean. Economic calendar, nothing today for Sunday. Monday, tomorrow, we've just got retail sales on the euro. So I'm expecting an incredibly quiet morning. Now, what does this do and how does this help me with my trading? Well, but when the calendar is pretty much empty, you can expect most levels just to work. You don't have to think about it too much. Just take the level and it will probably work. So that's subdued market conditions. And that's when you can apply more aggressive trading tactics. When you have a volatile day, see if we've got any coming up this week. Tuesday also looks pretty calm. All right, Thursday looks a bit more volatile. And it will be. So Thursday, I'm not going to be taking every level leading into CPI, right? CPI will get the market moving and levels were likely to get smashed. So my approach when we see a volatile day, which is identified by high impact news on the calendar, I'm going to wait until the high impact data is released. Then price is most likely going to move very strongly towards a level, and then I would take the level from there. I don't need to guess what's going to happen when the data is released. I'll watch what does happen, and then I'll profit from where price goes. So hopefully that makes sense. So that's volatile. And the last market condition type is unforeseen. For example, a rocket landing in Israel. Like there's nowhere on the internet, at least that I know of, maybe the dark web, where anybody could know that that was going to happen, especially at that time on that day. So the only way to keep yourself safe in something like that, which is something I definitely could not do whilst in the airport or going through security, was keeping an eye on stocks and the dollar index. So the key giveaway on Tuesday was marking the high and the low on stocks. So like, let's say if that level got breached, and let's say this level up here got breached, and price was somewhere in the middle here, I could set an alert just here, or I could set an alert just here, and basically it would be telling me that stocks are either pumping up or stocks are pumping down. That's the type of thing that you can do. But again, it's still not necessarily going to save you if you're busy in the day and you're away from your screen. You just have to accept sometimes that there are some things that are just outside of your circumstances, and you just take the loss. You take it on the chin. You're like, all right, let's review it. Let's learn from it. Is there something I would have done better next time? For me, yes, I wouldn't set a pending order. But whether or not that would have kept me safe whilst on the charts, like I would have seen stocks dropping. I would have been in front of Twitter, so I would have seen the news, and then I could have cancelled the order. And that's probably how I would have dealt with it had I been at home on the screen. But yeah, it is what it is. So hopefully that's somewhat helpful to some of you guys who are trying to still make sense of like what the hell happened on Tuesday. Like that's basically it. We had a strong dollar off the back of risk sentiment changing. And then just as the strong dollar started to subside, we then had a rocket come in to Israel, and that just continued the dollar strength because the market got scared. And so the smart money looked for safe assets to flow into. And at the moment, the dollar is seen as a pretty safe asset, gold as well. And through that, you see stocks dropping because the money is being extracted from high-risk investments like businesses, and it's going into a cash setting. Whether it stays in cash, I don't know. But you have to imagine that, let's say you've got stocks and you want to sell them and you want to buy gold. Well, the process to do that is to sell the stocks, get dollars, and then take your dollars and buy gold, right? So the money's always moving around. So that's just how I think of risk sentiment, and then you can think logically about where does the money flow. So that's that. Anyway, quite a good one this week because I've been able to get through all the trades without rushing them too much. I'm now going to go through the economic calendar if my voice will allow me to. It's hanging in there. So this is something that I advise everybody does ahead of the week. Look at what's happening this week so you can know ahead of time what kind of week you can expect. I'm probably going to place quite a few trades tomorrow if we're at levels and we get set up, because it's a subdued day. And then we've got Euro retail sales at 1 o'clock my time, which I won't expect much from. I'll just be aware of it. So that's Monday. Tuesday, overnight, we've got RBA minutes meeting. I'm not expecting too much from that. It's just a report, but it's the Royal Bank of Australia, so it might have some volatility overnight. So if you are trading on Monday and you find yourself getting into an Aussie dollar pair, Euro Aussie, Pound Aussie, Aussie dollar, Aussie New Zealand, Aussie yen, you might have some volatility overnight, but I wouldn't expect too much from the meeting minutes being released. And then we got nothing for the rest of the day. So Tuesday, if you think Monday's slow, Tuesday's going to be even slower, which means intraday key levels are going to work. So be aggressive with your levels. That's what that means. Wednesday, same kind of thing as Tuesday, although there will be there will be a lot of volatility on the New Zealand dollar pairs. We've got the New Zealand Royal Bank of New Zealand interest rate decision. This happens overnight for me. And so, consensus is 4.75, which is a cut from the previous 5.25. So either price will be priced in and the market will be expecting the cut already. Therefore, New Zealand dollar is dropping. It has been all last week. I can go back and show you that, but you'll remember that from my Euro New Zealand dollar trade. Price was trending down. And we got a pullback on Euro New Zealand. And then with the dollar strength throughout the rest of the week, it made the New Zealand dollar, as well as all other pairs, weaker, as in dollar up, New Zealand dollar down. So that hasn't helped the New Zealand dollar's strength. So more than likely what's happening is the market is expecting the Royal Bank of New Zealand to cut interest rates on Tuesday night. And when they do, price will probably just rebound. This is one of those classic examples of, but the news was negative, but price went up. It's like, yeah, because it was already priced in. And so knowing that, you can stop thinking about, okay, if the news is good, I buy. If the news is bad, I sell. Like, that's not how it works. It can work like that sometimes, but you have to think about what is the market thinking. Where are traders most likely going to get trapped? And this just happens over and over again. Price is already priced in. And that's why New Zealand dollar has probably been falling, as well as the fact that we've had a strong dollar. But still, somehow all of the data releases, all of the news events, it all just kind of works out with what's on the chart. It's amazing, really. But that's just because I think the charts are real time. The data is obviously old when it's released. Any news that comes out is about something that happened in the past. So the charts are always telling you what's happening right now. Thursday, we've got CPI. This is going to be a volatile afternoon, nothing in the morning. So you can chill out Thursday morning or be aggressive. But if you're looking at getting into anything, make sure it's a really good setup. And as we move into CPI, we get closer to the data release on that, you're going to want to look to either cash the profits that you're in if you're still in a trade. If you're in a small drawdown because your trading idea hasn't quite worked out yet, you might want to consider closing it or at least taking a partial to reduce your risk. But yeah, that's how I would approach it. So calm morning, pretty volatile afternoon, at least until after the CPI stuff is out. We've also got jobless claims. And there's a Bank of England monetary policy report hearings in there, just thrown in for good measure. But again, it's a report. It's not necessarily a data release. So we'll just have to see what happens with that. But initial jobless claims will also add to the chaos of CPI here. It isn't high impact, but it's moderate. So it usually does something. And then Friday, we've got harmonized index of consumer prices on the euro. So that's early in the morning. Might be some volatility around euro pairs. Given the fact the euro has been taking a bashing as well, maybe we'll see something good come of that. The market's expecting 1.8. Previous was 1.82. So, sorry, not 1.8, the number 2, but 1.8 as well. And so maybe we'll see some good news on that, and the euro will start to strengthen back against the dollar, as it's been on the back foot for all of last week, or this week just gone. Then we've got some CAD news in the afternoon, net change in employment and the unemployment rate. So employment figures for the Canadian dollar. So plan your trades accordingly in the afternoon. Look for levels that are close and nearby to any CAD pairs: dollar CAD, euro CAD, pound CAD, New Zealand CAD, Aussie CAD. Just be prepared for it. Set your pending orders, and most likely you'll get a bounce off of a level. Strong move in because it's data driven. Remember, don't be afraid of the news. People say don't trade the news. I don't understand this. Also, if you're trading prop firm accounts and they say they don't allow trading during news, that is not the case. If you set a pending order ahead of the news, that's not like trading the news. They're talking about literally pressing buy and sell as the data is released. Like, that's ridiculous. Anybody doing that should just be playing, online casino roulette or something, because it's the same thing. So, yeah, some CAD stuff on Friday that could provide some decent opportunities, and then we've got producer price index, food and energy on the dollar as well at the same time. So it's probably going to be quite a volatile market when the CAD release comes out, and then Michigan Consumer Sentiment Index a bit later in the day to finish off Friday. So how I'm probably going to approach Friday is grab some opportunities around the CAD and the producer price index data coming out around 4:30. That's GMT +4. So I think it's around lunchtime in the UK. And then I'll probably just back off and go do something else for the rest of the day, as it's Friday and the market will be winding down, despite there being Michigan Consumer Sentiment Index data coming out later in the day. And yeah, that's about it really. So I'm just going to have a look and see if we've got any comments. Mike says, okay, I was unsure about how to place orders around news on a prop account. Thank you. Yep. So just the same way we do it every time, Mike. Just pending order, set your alert. And if you don't like what you see around the news, if price is a little bit too close to your level, you can go ahead, set it on a level that's further away. Or you can just go ahead, cancel your order, and then just journal what happened. But yeah, that's the market this week. It's been a bit of a different one, which has been nice to see actually, because there's plenty of lessons there, especially for you guys in the community. For anybody that's not in the community, it's leveled effects. Basically, you can come in here and learn my approach to the markets, what I teach in the class. It's a leveled effects masterclass. As it says here, it's completely free. There is no gate. There's no gated entry to your trading journey. You can come and learn all this stuff for free. It's just in a structured way. If you're completely new, you don't even know what a candlestick is, or you've never looked at a chart before, there's something in here for you as well. I've got you covered. You can get started and go through the course. And if you are more serious about making trading, something that you actually earn a living from, then there is the paid community as well. But it's entirely on you. I don't push that. I'm not. We've got a really good group of people in there at the moment. It's at a point now where I'm really focused on helping the people in there get results. The whole point of the community is to grow off the back of its results. If I can't get people results similar to what I have, then there's absolutely no point in me doing this. I just might as well just carry on trading and just going about my day. So it's a really important thing for me to get in on that. If you do want to join, now's a great time, because it's only, as it says here, 20 odd members in there. And so, access to me is there daily. You can ask me questions. I'm very active, even in the DMs and helping people out with where they're currently at. I know everybody by name. and where they're currently at. So yeah, that's there if you want it. But like I said, the free stuff is there for you to take full advantage of. I'm here to help. The humidifier will help with my cough. Yeah, man, it's these Dubai air conditionings. Everything is it's not even the air outside. In fact, I'm telling you now, the outside air in Dubai would probably hydrate my throat. It's the problem is Dubai life is basically living in tunnels inside. So everything is indoors. You can go outside for about an hour in the morning. If you get out at like 5 a.m., I think it's only about 29 degrees by that point at the moment. And like even now, I think it's 29 degrees with no sun. So yeah. Anyway, that's Dubai. You know, there's plenty of benefits to it. Not everyone enjoys Dubai. My throat certainly doesn't, not at the moment anyway, but I think it's more just something I picked up in the airport. But anyway, guys and girls, I'm going to go ahead and wrap that up. That has been the Sunday market breakdown for the 6th of October, 2024, number 15 or 16 in the series. I'll just give it a couple minutes if you guys do have any comments here. Yuji's excited to be getting on with his week. Yeah, plenty of lessons there from this week, especially the ones where market flows were in play. Really nice trade on Euro New Zealand using New Zealand dollar as the driver. And yeah, a couple of good ones at the end of the week. Euro pound keeping me on the edge of my seat, which is nice. In trading, it's a constant battle. It doesn't get easier. Does it get easier? No, it doesn't. Trading gets easier as you get better, but you're never the master. You're continuously a student of the market, and that's the way you need to approach it. The minute you think that you've got everything down in trading, that's the moment the market will humble you faster than you know. So, yeah. But anyway, guys, hopefully that was interesting for you. I'll be back next week to do it all over again. And yeah, like I said, if you want to get involved, if you like what I'm doing here, if what I say makes sense, if you think that I'm a credible human being that doesn't talk a lot of nonsense or not too much anyway, then you can go ahead and join Leveled Effects. What I do in there is totally free. Go check it out. And yeah, I'll see you guys on the next one. Appreciate you turning up every week to do this stuff. That's what you need to do in trading. You need to be consistently approaching this stuff each week, not giving up, just keeping open to the lessons. And yeah, tell you never know how close you are to becoming a profitable trader until you quit. Like, we've got to keep you away from that. But anyway, I'm going to wrap it up there. Thanks again for joining. And yeah, I'll see you on the next one. See you guys.